can QuickBooks Statement Writer be used to report on different funds in a private equity portfolio? The answer is yes, if assuming that the funds in the private equity portfolio are all tracked under the same tax ID in the same QuickBooks file. So let's say we have private equity fund X, and that private equity fund has a tax ID and a revenue portfolio, right, consisting of the component entities and expenses and such. Then that entity in that QuickBooks file could definitely use QuickBooks Statement Writer to report on the financial position and the results of operations. One cool thing about the Statement Writer is that you can put out really professional looking financial statements. You can summarize and collapse assets, liabilities, equity, income, and expense accounts as you see fit in a way that's different from how the chart of accounts is organized in the nitty-gritty of the QuickBooks file. So those are some really nice features. And if you use, whether you're using class tracking or items or customers to track the activity of the component companies in the portfolio, you can use those same features to report in the QuickBooks Statement Writer. So yes, the answer is yes, as long as you don't have a separate QuickBooks file set up for each of your component entities, but just your funds piece of it. The QuickBooks Statement Writer isn't designed to consolidate multiple QuickBooks files. It's designed to professionally present in a specific way data or financial statements from within one QuickBooks file. If you want to consolidate the books of your component portfolio, the members of your revenue portfolio, the members of the fund, then QuickBooks Statement Writer is not the answer, and you'd want to use a consolidation tool like, I'm not really a fan of QuickBooks Enterprise, but technically you can use it, for consolidations. You can use an Excel-based mapping technique. You can use software like QVinci to produce consolidated statements. But of course, the information in those consolidated financial statements is very different from, let's say just reporting on the profit that the private equity takes, or the equity value, and then the income and expense of the private equity company itself. So those are some things to consider.